Nice. What was causing all the problems? Okay, shaded tear 'cause I'm missing you. Yeah, I had to unplug and plug my mic back in. That's what it was. Nice. That was useful. All right, so anyways, who cares? Get on with it. G'day, mate. Good day, how are you? Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. You know what? Let's do the long one. Let's do the long one. I like doing the long one. Welcome to Forex.Today. Let me remind you that the purpose of this presentation is education. This is not an alert service. I am not here to make trade recommendations, but I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky, not appropriate for everyone. However, your past performance, good or bad, is not necessarily indicative of future results, but always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Cool, huh? Don't touch the stove, you might get your fingers burned. Oh, mommy, it's hot. Told you. Thank you, Papa. Hey, my name is Wayne. I'm a Chief FX Market Strategist for TradersWay.com. We want to earn your business and loyalty. That's why we're doing these events to, our trick is to make you successful and therefore earn your loyalty and then therefore earn your business. And that's how we're going to take over the world, by making it a better place and having you in the center of our universe. As a client, of course. We do these sessions 7:30 in the morning every single day here at Forex.Today. Tomorrow I will be at FX Street for a little thing called non-farm payrolls, which I've been doing for 10 and a half years, I think. That's it, only 10 and a half years. So hope to see you over there as well. Go to fxstreet.com and register for Trade Non-Farm Payrolls Live. It's free for all. So let's move on over to the charts. Only 10 and a half. Yeah. Cool. Aight. So yesterday, I know you spent time on the IMF website reading economic releases, and I'm sure today you are spending time at the European Central Bank reviewing their account of the monetary policy. Right? Seems to me that's what smart money would be doing. So I know that's what you must be doing. Just wanted to make sure. I know I'm Captain Obvious, of course. But just want to make sure everybody's on the clue train. All right, just right. So there you go. ISM services were fantastic yesterday. Put that into your NFP model. Okay. In fact, why don't we just pull that up now? Anyways, let's do that now. ISM dot, what is it? WF. It's a weird. The URL is different than in the old days. All right, cool. Most recent. Hang on. Most recent. All right. Life is great. Life is grand. What am I looking at here? The employment subcomponent. All right, so September came out 57.2. August was 50.7. What? September 57.2. August 50.7. What? September 57.2 compared to 50. What? Like, oh my God, the positive differential of 6.5? Oh, holy schnicker. Oh my gee, WTF. Yeah, that's wow. So it's growing, and the rate of change, the velocity of change, yeah, it's getting fast, eh? But the trend is only what, 4 months positive. Well, but that is redonkulous, guys. Redonkulousness. So, Justice, hey Wayne, can you send the link to access the FX Street NFP? Oh, why don't you just go to FX Street and click on the button? It's usually right on their homepage. Yeah, I'm happy to say, I believe over the 10 years it's been consistently their biggest webinar. Oh well, yeah, maybe the new website's tough, huh? Okay. Maybe they lost. Oops, wrong one. Hang on. No, stop it. Stop it. You are not alone. Okay. Yeah, so maybe it is difficult to find, right? All right.
660 now in cable, down 88 pips.
Wow, it's slow loading stuff, huh? All right. Nope. Doop. 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 How about this one? 125th month I've done this. Oh, interesting. That's a nice psychological number for some reason. $125th. All right. So, anyways, that's that. I got it for you. There it is. So I'll see you tomorrow. Non-farm payrolls. So, anyways, you put this in your model. The employment subcomponent of ISM services, otherwise known as ISM non-manufacturing. Cool. But what else has come out recently? La 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 la. Challenger, Christmas, and Gray. EA, or is it AY or EY? Challenger Gray with an A. A? Challenger Gray. Oh, oh, oh. Mm-hmm. Mm. Boop. How about us? Let's do press releases. It must have been a press release, huh? Hi, All right. Is that right? September 44. There you go. So last month it was 32,000. This month it's 44,000. See, 32,000. Cool. Well, there you go. Yeah. So 44. So what's your headline number? So what do you think it's going to be then? They're saying 170, I think. But then let's update our model with a great ISM services employment subcomponent. So let's put it to 2, and then let's subtract 44. So let's say 155. Ryan says 160. That's ridiculous. 155. I don't know where you get that nonsense, right? Yeah, 160 is fine. So anyways, there you go. It's not good, it's not bad. But, you still could be surprised with such a giant ISM services. And also last month could be revised up, right? Because I believe they seasonally adjust all this stuff, which means they have no idea what they're talking about in the first place because it's all done by survey. And from that, they extrapolate, voodoo magic. And then they seasonally adjust that.
Land data, their nominal wage figures.
So how do you seasonally adjust voodoo magic? So anyways, the thing that's really on my mind, though, is not the jobs report, not the presidential election in the United States. It's not the Fed rate hike. It's South African electricity usage. Did you guys see that? The electricity demand is significantly higher in South Africa this year versus last year. What are you guys doing? It's up 1.6 year over year, 1.6%. Electricity production is up like 4%. Yeah, I'll never forget my visit to Johannesburg up there on the hills, looking down at the beautiful view of the nuclear power plants. The most beautiful nuclear power plants I've ever seen. Have you ever seen those nuclear power plants during a sunset? Breathtaking. Yeah. And are they even doing anything? I think they're there just for show, right? I don't think they're even generating power, are they? Yeah, it's just, what could we do to spruce the place up? I don't know, let's just build some nuclear power plants right in the middle of town too, right? So some countries, they put their nuclear power plants like way far away. Yeah, trees. Let's be modern. This is for modern Africa, right? So anyways, yeah, so power this may be a good thing and this may be a bad thing, right? So a growing economy tends to need more energy, right? So that may be a good thing. Last year probably, if last year was a bad year for energy consumption, I'd have to say that the economy probably wasn't expanding. And now this year is going to be significantly higher than last year, so that seems hopeful, unless they're measuring it in things like by price or something. But they're probably doing like kilojoule or something in their measurements, which is fine. So at first it seems good, but then they've increased production by 4%, but demand is only up 1.5%. So it seems like there might be a mismatch there. Yeah, Pippin, I only use the services number, the subcomponent. Remember, it's the employment subcomponent of ISM services, not just the number, the employment subcomponent. The reason for that is the United States is primarily a services industry. I don't know anybody that works in a factory. Now, I live near the busiest airport in the United States, and in some measures the world, and a couple of my friends work in the supply chain management industry. One is doing quite well financially, and the other one is filthy stinking rich, like private jet planes. We're at a party and a friend says, "Oh well, our children have never flown on commercial." So I threw my drink in her face. Seriously, true story. Oh, well, our children have never had to fly commercial. They don't even know what it's like. Oh, did I spill that all over your face? Oh, I'm so sorry. Yeah. True story. Like, really? Yes, we take the plane and we fly down to our yacht in the Caribbean. Like, yeah, you're scumbag. Yeah. So it's an employment subcomponent. It's services. So I don't know anyone that works in a factory. I know a couple of people that work for companies that own warehouses. That's as industrial as we get. You pay to of well, you can. Yeah, I guess I do, huh? LJM. I mean, they're just my friends. I don't know what else am I going to do. I can brag about people I don't know. They are my friends. I mean, what's that? Oh yeah. So yeah, can you use the ISM manufacturing employment? Yeah, sure. Throw it in there. Yeah, Ron knows some factory workers. How are they doing, Ron? Do they like their jobs? Are they getting paid fairly? Are they buying stuff? Like seriously, do they have giant TVs to watch a football game on Monday nights? What's life like for a factory worker? Yeah. All right. Yeah. Doing good. What color's the Escalade? Greg, what part of the world? Ron, it's a white Escalade, right? Pearl white. Correct term is blue collar worker. Yeah, but you might actually work in a factory, right? That's all. San Diego. Oh, it's San Diego. Cool. And is it a decent job? Is it something that you feel comfortable with, or is it, could you be fired at any second? Are they be working fine, getting paid fine? How big's your TV? I mean, this is what it comes down to, guys. We're economists. I ask everybody. My wife rolls her eyes at me because I go into the grocery store to buy something and I have to talk to everybody. Ron's got the 30s, and probably 20s, huh? We do it for 40 years, and it sucks. Well, at least we live in a world where you can change, right? Imagine that you couldn't have the opportunity. I mean, just a little simple thing like, let's say they're like, oh, well, foreign exchange is, you must be a bank to trade it or a regulated hedge fund, and that's it. And by the way, to be a hedge fund, you need $3 million minimum net cap. And to work at a bank, you need an Ivy League master's degree. So that's it. You can't have it. So at least we live in a world where you can say, well, you can open a foreign exchange account. You could even use your credit card if you want, and that's it. Now, in the United States, there's only 3 brokers left because the industry is so horribly overregulated by people that don't even understand what they're doing. So, I mean, hey, whoa. They know what they're doing in the futures market. But there's some gray areas of understanding by those that regulate the Forex industry. So now, if, what's left? FXCM, Gain Capital, and Oanda comes over the border from Canada to pick up some crumbs. Like, wow, that's pretty lame. But at least we have that, which is good. Okay, so we'll do some text now. But so, anyways, I don't think we're going to get a bad NFP. I think we could even get a good NFP, but we'll probably get about $1.50 to $1.70. Zeal says, is it easy for Americans? Yeah, in fact, that's one thing that's pretty good about the United States. There should be easier things. Like, for example, if you're in San Diego working at a factory and you wanted to move somewhere else in the United States and get training, it should be super easy. Like if Greg was going to move from San Diego to Boston, get 2 years of education at a university, and then get a higher paying job in some other industry, instead of having a welfare state that pays people to be unemployed, what I think the government should do is say, look, if you want to be employed and you need to move, we'll make it super easy for you to move. And if you sign up for, let's say, I don't know, some sort of, if you can prove that there's going to be a job at the end of this, we'll make it super easy for you to move. We'll make it super easy and cheap and maybe even free for you to get a real education so that you can develop skills that are more desirable for current job markets. You know what I mean? Right? Do you know what I mean? Like, so that you can just go from working in this part of the United States in job type of A that's becoming obsolete, and then go way over here to the other part of the United States, get retrained, and then work in that other job in that other industry. I think that's where the government should get involved in different ways of supporting entrepreneurialism. Just like capitalism does a very good job of shifting savings from people that have excess capital but are not using it, and shift it over to entrepreneurial endeavors that could put the money to work. And that can be through like the stock market or bond market. That can be through all kinds of other ways. But just even the banking system says take money from the savers and give it to those that have uses for them, and then there's a return on capital for that investment. But there's also the invisible hand of everybody in the economy is going to be better off because of this product or service has either been improved or created, right? So how do you get a factory worker in San Diego to work at a bank in Boston? Well, maybe that should be easy. But you can, in the United States, pick up and move. One of the things that they have is if you move more than 1,000 miles from your home, or even 500 miles, I think it is, from your current home to a different home, all those costs are a tax write-off. So if you rack up like $5,000 moving your house, literally just moving your furniture over to a new home, 500 miles or farther from your original home, all those costs come out off your taxes. Right? But yeah, in the United States, you can move it. You can move. You know what the problem is? People are silly. They say, I can't leave. My friends, my family. Mm-hmm. Stalling out here. Just want to bring that up. Noki. Caught on the weekly. Wow, look at that. Beauty. Goldie. Oh, Mitchell says, did the '08 financial crisis affect non-farm payrolls? Well, of course, if people lost their jobs, it's going to be reflected in non-farm payrolls. But, and there were some pretty scary ones. It was a very interesting time to be alive, faux show. The most interesting thing about the whole financial crisis had to do more like 2007. I think it was about this time of year, maybe September, I'm guessing. I was in Barcelona, Spain, speaking at FX Street. They had a live event. There were, 5 or 6 other professional traders or speakers or whatever, bankers and other people. And at the end of it, we had this little panel discussion, and people in the audience kept asking the other speakers, like, what's your prediction for this and what's your prediction for that? But you got to remember, it was the end of the world. It was the beginning of the end of the world, the financial crisis, right? And I had already moved from California to Georgia to protect myself from the zombie apocalypse or zombie bank apocalypse. So I already had plans. I already did the analysis. I already knew, I had a bias, let's say, and I was really taken aback that none of the other speakers really had clear answers. They had lots of guesses and stuff. But so, anyways, so finally, I grabbed the mic. I'm like, look, let me tell you what I think is going to happen. You know how I get, right? Sometimes I just lean into it. All right, here's the deal, guys. So I leaned forward. Oh, look, I said about a month ago, the government released a report saying that it was the largest purchase of 90-day bonds in the history of tracking this data, right? A 3-month bond. Largest purchase by institutional investors ever. It was like hundreds of billions. I don't know. It was just this huge wave went towards, the largest wave ever, went towards these 3-month treasuries. It was about a month earlier. Right? And I'm like, okay, so the stock market crashed. All this money went into the bond market. I said, well, what do you think is going to happen in 60 days? I said, so what we're going to find out is they bought 3 months to just get out of the market, catch their breath, and wait to see what happens. Right? This September 2007. So I said, well, just fast forward. They didn't all buy these bonds on the same day, but roughly 60 days from now, they're going to have to make a decision. Is the market better, and is this an opportunity to buy back into the stock market? Or is there still risk? Is the market still getting ready to deleverage? Is there more downside? And if the answer feels like there's more downside, what are they going to do? Can you guys see the binary decision process here? If it's risk on, what will they do with that, $100 billion trillion? They'll buy the stock market. But if it looks like the stock market's going to fall off a cliff, they're going to buy the bonds again, right? They're going to roll over. Is everybody following me? Yeah. So I said, just go, look at your calendar, roughly 60 days from now. If the stock market falls off a cliff, the pound yen's going to drop 3,000 pips. If the stock market rallies, the pound yen's going to go up 3,000 pips. So I'm like, just track down the day. So roughly 60 days from now. And some guy's like, can we do a special webinar at FX Street and all this kind of stuff? I'm like, look, it's not going to happen all at once, but roughly 60 days from now, people are going to make decisions with their billions of dollars. And I was wrong. The pound yen dropped 4,000 pips, so maybe 5,000 pips. Yeah. So I had an opinion. I had already moved my entire family from one side of the country to the other. Had an opinion, and I had like a logical, intelligent reason behind it, and we could almost pick out the day in which it probably would happen based on something that I think someone could easily understand. When $100 billion got taken out of the stock market because it was falling, they bought 3-month treasuries, the largest purchase in the history of the world. And in 3 months, they're going to have to decide, keep them in treasuries or get back into the stock market. I mean, there you go. I mean, just analysis. So you asked, what was 2008 like with non-farm payrolls? I remember bad numbers, and it wasn't as scary actually as you'd think. There was lots of pops and stops, fits and starts and stuff, but that kind of stuff I remember. It was the earlier on stuff when people were like, "Oh my God, is this the end of the world?" Right before Lehman and all that. I also remember one time. I was in New York, I think it was on Bloomberg or I was downtown. Why was I downtown? Anyways, I was at the Ritz-Carlton in downtown Manhattan. It must have been an FX Street thing. Forex Television. I was because they're downtown. So, anyways, I don't know why I was at this Ritz-Carlton in downtown Manhattan, but that's the financial heart of America / the world, right? And I remember doing non-farm payrolls from the hotel, and I'm looking out the windows of downtown Manhattan, and actually the water and the Statue of Liberty was a beautiful room. And it was the day like Wells Fargo basically went out of business. Like, oh my God. Like that kind of stuff, I'm like, wow, like it could be the end, And so Wells Fargo got money from somewhere, and then they had to buy somebody else, and someone else went out of business, and it was like literally capitalism was ending, and it was a beautiful sunny morning in Manhattan. It was just like, yeah, well, the financial system's going to blow up literally in front of my eyes, but the Ritz-Carlton's nice. It's just, wow. It was really a crazy time. It was a crazy time. It was very interesting and odd. But a good time to be in downtown New York or downtown Manhattan. So those are my memories. All right, so here we are. This is gold coming down. I've been a bear on gold for so long. It's funny. Just looking at these numbers, I remember like 1,000 years ago we were at 1382, and that was a sell in here. And then it dropped to this 1050 area, and the target was somewhere between 1,000 and 1,100. So it fell to 1050, which was funny. And the only really other number I remember is this one up here because of 1382. I mean, it's not even a real price. It's just, obviously a Fibonacci number, right? 1382. It's just something easily to remember. I remember even talking about there. It's just funny to see these things where, so price went from basically 1,000, where to go back? 1374, but you can call it 1382. I mean, come on, it's pretty close, right? Just funny, up and back and around. But if interest rates go up, there's no need to own gold. I prepared everybody here for it. I said one thing that could happen is negative interest rates around the world could be decreased. They could be moved back to zero or closer to zero. But that is a form of raising interest rates. Right? Do you guys remember talking all of that? Yeah, I see it. There's a weekly pivot point in there too. Thank you. Thank you for that. Yeah, so we were talking about that. A reduction in interest rates from negative to closer to zero is a form of raising interest rates, which would weaken gold, for example. And if the Fed raises interest rates, that would also weaken gold. So, and lo and behold, this part, we got gold weakening. And to say the opposite, conversely, what created this move from 1,050 to 1,350? So what was this $300 appreciation, excuse me, in gold? The introduction of negative interest rates from multiple central banks around the world, which made gold relative to these interest rates look like it paid an interest rate, because zero was higher than everybody else, right? So that made gold attractive. Well, that policy may be going away, and so gold weakens. There you go. So I'm not even looking at a chart, and that's what's happening. Now, if you were looking at a chart, you would probably look at this area and say, this could be support. Right? But, there we go. But, you know, fundamentally, I don't think it's a good time to buy gold. Technically, it may. Maybe it bounces. Maybe it goes back to the top of the range. Maybe even it goes higher. Still wouldn't be interested. Okay. So I can see to my right, and others here have been reported, that oil has hit $50 a barrel. And if it continues up from here, and I'm not saying it will, okay, then Noki should get strong. Plus, it's reversing at a weekly central pivot. Plus, it's kicking off of a 1 hour 200 EMA. Plus, it's essentially a roll reversal area. Standard operating procedure and price action would have this maintaining its downward move. Central weekly would predict somewhere around the weekly S2, which is also right around the weekly S1, or monthly S1. So if you thought oil would continue up in its bullish move, then Norway will benefit. I'm not really ready to drink the Kool-Aid on $55 a barrel oil, but it is what it is. But I just want to introduce this because last week, if you recall, last week, I brought this Noki out for you guys because we had this initial move based on the OPEC, which was on a Wednesday, but the decision, I think the idea of an agreement was Thursday, right? So the discussion here was buy some Noki, and it did appreciate. Now we're kind of in a role reversal. Okay, even though we never talk about it, you can talk about it. Let's do this one. Let me get the number. Hang on. 249. Good. Good. That's another good NFP. It's a good number. The average is 256, and we came in at 249, so that's good. Oh, Canadian building permits way up. Holy smokes. Somebody in Canada suddenly wants to build something. So here we go. Laying around downtown by myself, and I've had too much caffeine, and I've been thinking about myself. Then there she was. I spelled WTI. So yeah, so here we are playing the 50s. Yeah, wow, yeah, up in here. So again, is there true supply and demand issues? Well, maybe. There's a hurricane right now. Did you know that? Another hurricane. Was it last month, non-farm payrolls? There was a hurricane? Yeah, Joe, I just said that. Yeah, the number was better, 249 versus 256. So anyways, we got another hurricane going on. Yeah, I have relatives at my house because it's made out of brick, not straw. Yeah, they've had to evacuate. It was mandatory evacuation if you lived on the beaches. and they lived on an island, so they had to get off the island because of the hurricane. So here we are. So that could disrupt oil as well. But long story short, what should make oil go up is increase in demand. So I don't know. We could play this game for a while, but I don't think it's going to stick. So anyways, yeah. Oh, here's an interesting piece of information. So I just said 249 is better than average. 256 is average. Actually, the true 4-week average is 253,000, right? 253.5 thousand. But that's a low. Do you know how long it's been since we've had a 4-week average as low, at this 253.5 thousand? You know how long it's been? It's pretty amazing. 43 years. Oh, what? December gold futures nearing its 200-day moving average. Fine. So oil's just moving up a little more. I'd be careful in here, guys. I'd be careful in there. So anyways, building permits in Canada way, way up, but that's quite volatile. So really, I think it comes down to what happens tomorrow. Challenger, okay. ISM, much better than expected. NFP, generally, the general trends are usually, steady. But I'd say a 249 on the jobless and a 43 year low on the weekly. This is interesting because you might say that points to a bigger number of non-firm payrolls, but it may, talking about it out loud or thinking about it out loud, what if that's a participation rate issue? Say it differently, like what if we are at full employment, everyone that wants a job has found one, or is looking for one, but that number is lower and lower. Like the reason jobless claims are so low is that they're not in the workforce. And so non-firm payrolls numbers might get smaller and smaller, but there may be less and less people to hire from, So there might be, let's say, 1 million jobs available, but if there's only 200,000 people looking for jobs and they barely have the skills, I don't know. So what happens if you are looking for a skilled worker and there just isn't anybody out there worth hiring? What do you do? You're like, man, we're not getting a lot of people applying. The ones that are applying, they're not really like qualified. We don't really want them. Come on, guys. Put your economics hats on. You steal the worker from somebody else. So wages go up. Or import, yeah. Okay? Yeah, headhunt, same thing, right? So you go out and you pay more. So that would lead to inflation, wage growth, right? So maybe I might want to switch over there now. And we have been talking about this over the last maybe 6 months to a year. And maybe now it is time to not look at headline numbers anymore, but look at just to say that we are at full employment. And now we got to look at, the participation rate. We got to look at wage. That will lead to inflation. You know what I mean? If you could just work at the factory across the street, or another example, if you could just like leave Facebook and walk over and work at Google, because Google gave you a better deal so that you can type code. Fine. You walk over there, better deal. Nicer gym. Great. Right? Something to put on your LinkedIn profile. So yeah, so I guess we got the tables set for non-farm payrolls, so I can't wait to see you guys over there at FX Street. So peace on earth, may the pips be with you, may your profits be above average. Yes, Ron, I can do that for you. Cheers.